Yeah. FBA dreams, FBM hustle, private label stacking muscle, Intel rank on the track. We on
Hello and welcome to another episode of intelliTALKS. For today, we have a very close friend of mine who's dealing with something very intriguing that we're going to dive in today. Everyone, welcome Matt Remuzzi. Welcome, Matt. How are you doing?
Good. Thank you for having me. It's good to be back.
Yeah, happy and always a pleasure. And for today, we have something very nice installed in regards to, since it's that period of the year, we have to file taxes, we have to look into the profits for last year. So yeah, it's the best time of the year to talk about it, I believe.
Right. I mean, there's, excuse me, never a good time of year for taxes to be paid, but hopefully if we can keep them as low as possible or even get them all the way to zero, you know, that makes people feel better, right? You work hard all year to squeak those profits out, to do everything you can to make the business as successful as you can. And then you turn around, if you have to cut a big check to the government, that always hurts. So we try to make sure that we can help people as much as possible, keep that as low as possible so they can keep all that hard work and have something to show for it at the end of the year.
Oh, amen to that. Everyone is looking for the cheapest tax to pay to the government out there. So why not? It's amazing, Matt. I'm looking also forward to this conversation myself because I'm also paying taxes. So at the end of the day, here we are.
Right.
Yeah. Let's start by looking at some mistakes that maybe e-com or Amazon sellers are making when filing income taxes, and how hurtful can that be? I'm sure you've seen a lot.
Oh, I mean, people come to us with all kinds of problems, but some of the most common mistakes we see, the first one is just they don't keep any books, they don't keep any records. And so then this time of year becomes very stressful because they're trying to figure out, how do I even know what I can write off, what expenses I had. They're scrambling around trying to download reports and put things in spreadsheets, and it becomes very stressful. And of course, the tax form is very complicated. It's not obvious or easy to complete. And what happens a lot of times is people miss things. They miss opportunities to have expenses or deductions they could have taken, but in the scramble, the mad scramble to try and get everything in and beat the deadline and not have fines and penalties for being late, they miss things. So the first best thing they can do is keep good books all year long. That way, not only can you be ready to file taxes when it's tax time, but even well before tax time, you know exactly where you stand and you didn't overlook anything that you could have benefited from. That to me is the most common mistake that we see.
And also, I want to add something here. Probably the worst mistake you can do is just to work with a non-e-com specialist. So yes. A lot of people choose the cheap way out, probably. But yeah, probably you've seen this one as well. People, just reaching out to you because they've worked with someone that messed things up for them.
All the time we see it. People come and say, "Oh, last year I'm hoping to do better. Last year I paid, $20,000, $25,000, whatever the number is, in taxes, and here's my return." And I'll look it over and I'll say, "If we had done it, you might have paid only $5,000 or zero." And they go, "What? Oh my gosh!" But I only paid $400 for the tax return. I know, but you paid $25,000 in tax, so. What's the better deal? Come on, think about it.
Yeah, that's a simple decision there. There we go.
It should be hopefully a no-brainer decision. Yes.
Yeah. What would be some realistic savings that people can expect in the e-com or Amazon industry, for that matter?
Well, we've seen some pretty big swings. We had somebody who came to us originally, decided we thought we were a little too expensive. So he went to a different CPA. He ended up paying $75,000 in taxes, right? The CPA did the work. They said, "You owe $75,000. You paid $75,000. Then 6 months later, he got a letter from the IRS saying he owed another $75,000. So he called that CPA, and the CPA said, "Well, you got to pay it. It's the government. What are you going to do?" So he called us back and said, "Is there anything you can help me with?" So we reviewed everything. Not only did we make the $75,000 extra payment go away, we got him a refund of the entire $75,000 that he had paid. So he went from potentially $150,000 in tax to zero tax. So the savings can be pretty substantial. E-com is its own thing, right? If you go to a CPA who does dentists or does restaurants or auto mechanics or something, fine. But e-commerce is a different kind of business. It has different opportunities, different potential for tax savings. And if you're not working with someone who understands that, you may get treated like a dentist office or a restaurant and end up with a much bigger tax bill than you needed to. So people are a lot of times surprised by what we can do for them. And they go, well, my CPA never said anything about that. I know, because they're not e-commerce specialists. I mean, that's like you said, that makes a huge difference.
Well, yeah, a huge difference in the pocket, that's for sure.
Yes.
That's where the bad things happen, whenever you have to pay, and you could have kept the money,
Yes.
Especially after a hard year. With Amazon, for example, spending and, not spending, but getting us Amazon sellers paying even more taxes and more expenses over the platform. We tend to look over every penny just that we can save, not pay to the government if possible. But that has to be done in a smart, elaborate way. So, yeah, here we are.
Yes, exactly. And I mean, the money that you don't pay to the government, you can use to buy more inventory, spend on ads, grow the business, and the business value then increases and your overall wealth increases, because a lot of your wealth is tied up in the value of the business. Every dollar you pay to the government that you didn't need to isn't just a dollar lost. It's $1.50 or $2 or $3 because of the opportunity cost and not being able to grow the business. So it pays to run this business like a business. I know a lot of people, when they watch the YouTube guys, the influencers, and run it from the beach with a laptop, but it's a real business. If you want to treat it like a real business, you can get real business results. If you want to treat it like, a side hustle or a part-time thing, you don't expect great results if you're not treating it seriously like it should be.
Mm-hmm, mm-hmm. Yeah, that's definitely the key there. Just you gotta play the game. Yeah. Well, I heard you say it, and I like that approach. It's something that we're using in our businesses as well. Just paying for more inventory and making sure that the profit, just goes down. And this is the simplest approach, but I'm sure there are other, more elaborate and smarter things to do than, paying for inventory in advance and, removing is this one of the ones you mentioned, right? I understood it correctly, Matt?
Yeah, definitely carrying the cost of inventory forward into the current year when you buy it and not expensing it when you sell it, like the accrual basis. But also, one of the other simple things that we see for people who sell on Amazon, if you've ever looked at your Amazon 1099, right, the dollars that they tell you on that is higher than any other report that you get from them, and certainly way higher than anything that ever got to your bank account, right? If you go to your average CPA and you hand them your Amazon 1099 and they don't understand the difference between the 1099 amount and even your gross sales amount, and they put that in, what happens is you have this section of sort of fantasy income that gets reported and not offset anywhere. So then it trickles down to look like profit, and you end up paying tax on money you never in a million years were going to even get, or had any inkling that they were even counting as income for you. So again, sort of a typical CPA who's used to dealing with 1099s that just show the gross sales of a business. If they plug in your Amazon 1099 and don't offset that gap between the 1099 amount and even your top total sales, you're going to end up paying extra tax and not even realize it on again, money that you had no hope of ever seeing, and yet you're going to get taxed on it. So there's a lot of different things that go into the e-commerce income tax world that is not typical for other industries. And if you don't understand and know what you're doing, you're going to get bit by it.
No, definitely. Yeah. So the idea is to avoid that as much as possible. But yes. What are some strategies to employ for max savings? So how would you treat that bit in the business?
So one of the other things we look at when businesses are profitable, and after we've sort of taken the inventory off and the 1099 amount off and the accounts receivable amount off, one of the next things that we look at is how their business is set up. If it's a single member LLC and it's profitable, even after all that, they're going to end up paying payroll tax in the US on those profits, on the entire amount of the profits. So a lot of times you can convert it over to being treated as an S-Corp and then put yourself on payroll for a smaller amount. And then everything above that small amount that you pay yourself now comes to you payroll tax free. And this we've seen make a $15,000 to $20,000 difference in people's tax bill just by basically changing the paperwork forms that you're filing. And a lot of people don't realize it, or again, they ask their CPAs, maybe they heard about it somewhere and the CPA says, oh, that's a lot of work, or it's a lot of time, or it's complicated. It really isn't. And for a few minutes of paperwork, if you can save $10,000, $15,000, $20,000, I mean, that's paperwork I'd be willing to do. So again, these simple strategies can really make a huge difference, but a lot of people just simply overlook them.
Yeah, definitely. Yeah, the strategy you just mentioned, is it only for US citizens that have an LLC? What happens if a non-US owns an LLC in the US? Is it the same situation?
So if a non-US owner has an LLC by themselves in the US, then they actually don't pay any US tax. A single member LLC in the US passes whatever profits it has back to its owner. And if the owner is overseas, then they generally pay tax in whatever their home country is or wherever they've set up that LLC. It doesn't pay tax in the US. If they're a partnership in the US with one foreign owner or both foreign owners, then it can get a little bit more complicated. In that case, we generally recommend setting up as a C Corp and then potentially having a business overseas, charging the US C Corp a management fee to kind of suck the profits out and take those overseas if you're in a lower tax jurisdiction. Some of our clients overseas are in places where their tax bill would be even higher than if they paid the US taxes. So for them, it's better to pay the US taxes. So every situation is a little different. And that's why we don't have a sort of, one size fits all or bronze, silver, gold setup. Every client we talk to, firstly, what do you have going on? What's your situation? And then based on that, we'll tailor a solution to give them the best outcome. But there's no, sort of one size fits all advice, despite the fact that there's a ton of one size fits all advice floating around there on the internet and TikTok and whatever. And people say, oh, I heard about this, I want to do that. I'm like, well, that doesn't even apply to you at all. But we tailor everything to everybody's specific situation.
That's amazing because, no situation is like the other. Yeah. All right. That's perfect. What would be the right time to, just plan for tax savings? When would you see that happening during the year or beginning, end?
So normally we suggest people at least once a quarter kind of look at where they're at and make sure that they're on track, that they've done everything they can. Excuse me. If they're, their business has been going a lot better this year, there might be some new strategies to put into place. If things have been flat or declining, then at least maybe they don't have to pay in as much in estimated taxes or anything in estimated taxes if sales are going down, or if they were an S-Corp and paying themselves salary, they could turn that salary off to save money. So we want to help them throughout the year. And that way, when you get to the end of the year, you've done everything you can. There's nothing worse than somebody that comes to me in January, February and says, here's where I'm at. I go, well, gosh, if you'd come to me in even December, I could have helped with these things. But now that it's January, February, it's too late for last year. But it's never too late to start doing it right? So, okay, whatever happened before, we'll make the best of it. We'll do the best we can with it. But from here forward, now that right, there's no reason not to get the best outcome going forward. So really, it's not something to think about every day, but throughout the year, it's good to tax plan. That way, by the end of the year, you've already done everything. You're not scrambling around trying to get, last minute things done or beat deadlines.
Oh yeah, definitely. Preparation beats everything.
Yes.
Amazing, Matt. All right. Is there any other tips and tricks you can share here with the audience since we're here? What do you think? Or any other ideas you might have going to your mind?
Yeah, I mean, I think sometimes people think that an e-commerce business is, they're sort of not allowed to do certain things. Yes, you're selling online, but it doesn't mean you can't go out for meals sometimes to talk about business or, talk business ideas. You might have some travel. Maybe you go to a show or a convention or an event. Maybe use your car to drive around and look at potential products, new products you might sell. You definitely are working out of a home office. You have a cell phone. A lot of times people overlook those basic expenses that they can run through the business to help lower their tax bill. And again, that's why having good books and good records really helps, because then I can see, here's what you included, but here's all the things I think you might have been able to include that you didn't mention. Did you do any of these things? Did you buy a laptop or new monitor or a desk? Did you remodel your home office? Any of those things? Did you buy training courses or masterminds or anything? And that all can add up. All those, the subscription softwares that you've got, all kinds of stuff. There might be $15,000, $20,000 worth of expenses that you just weren't thinking about. You generally think about ad spend and inventory, but there's a lot of other costs that go into running the business that you can include that helps lower your tax bill. So just making sure that you've got, a good handle on everything that's going into the business, not only for tax time write-offs, but also just so you know, how much is it costing you to run this business? And are you, profitable, or how much is it going to take for this investment to be, to make sense for you, to pay you back for the time and effort you're putting into it? I think it's a numbers business. It really is. And if you don't know your numbers, you may not be running a very good business.
And for anyone that doesn't know Matt is a numbers guy. So this is like his world. He loves that. So he's the right person to get the board for definitely for numbers and doing books. That's for sure. Amazing, yes. Amazing, Matt. This has been very, very interesting. And I will just pull up on the screen. Tell people how they can reach you. I know we have the website. That's definitely something. And
yeah, that's generally the best way to check us out. Visit the website. You can see the services. You can see the CapForge.com is the website. You can see the services we have and our contact info, set up an appointment. Happy to talk. No obligation, no cost consultation to see if we can help you out. And if we can, great. I'd love to work together really to help put more money in your pocket from a profit standpoint and keep more of it from a tax standpoint. That's what we're after, is to help our clients make more and keep more, so that business effort that you put in all year long really pays off as much as it can.
And on top of that, I'll bring something else on the screen, because Matt said that he will be offering a free income tax return review to see if you missed out any savings. It's not too late, Matt. Is it for 2025 or?
It's not too late. If you haven't filed your tax return for 2025 yet, and we're really just getting into the season, then let's make sure that if you overpaid last year, we don't repeat that mistake. If you, missed opportunities, missed savings opportunities, or tax write-offs you could have claimed last year, let's make sure we get them this year. It's not too late, but don't wait, because the deadline is coming up. So if you'd like to see if you could save more, if you could get a better result, I'm happy to take a look, give you some feedback on what you got, and see if we can save you more this time around than you ended up spending last year.
It's a numbers game, and Matt is the right guy to do that for you. With you, sorry.
Yes.
Amazing. Matt, thank you. Thank you for your time and for the very nice insights that you shared today. And I will leave all the information in the description of this video. And do reach out to Matt for a conversation. And why not take advantage of this free income tax return review?
Perfect. Right. Thank you so much for having me. I appreciate it.
Thank you for being with us, Matt. Until next time. See you.
Keep the dream alive, keep pushing through, from the first shipment to 1 million streams. We all got here chasing boxes and dreams.